pensions, 401ks, 457s, healthcare, retirement. It's sometimes difficult to make sense of it all, and in these times, it's as important as ever to understand how to plan for your retirement and the financial security for you and your family. When it comes to investing, CalPERS' goal is to efficiently and effectively manage investments to achieve the highest possible return at an acceptable level of risk for millions of Californians and their families. That's reassuring for the CalPERS members who are looking forward to retirement, and even more so for those members participating in the CalPERS 457 Supplemental Income Plan. So, how do you invest for your future using the CalPERS 457 plan? We're here to show you. So as a participant in the CalPERS 457 plan, what do you need to know? Well, one thing is certain. An important component in keeping retirement funds efficient lies in the way those investments are allocated. As a CalPERS member in a defined benefit plan, you will earn a guaranteed benefit defined by law. This benefit is based on your years of service, your age at retirement, and your annual salary. This income may be supplemented by making payroll deductions into the CalPERS 457 Supplemental Income Plan while you're employed. So, who will be responsible to make sure you're saving enough to retire in style? The ultimate responsibility for the investment decisions within your plan lies with you, the participant. You will have the opportunity to create your own investment strategy and follow that strategy as you accumulate savings to meet your ultimate financial goals. The strategy you may want to include is that of a well-diversified portfolio that spreads your money across different types of investments or asset classes. The importance of a diversified portfolio is that it may help smooth out fluctuations in the market while taking advantage of the potential for higher returns. In the long run, a well-diversified portfolio may help determine your long-term performance and may offset any poor performance in one area by gains in another, which allows for more consistent performance under a wide range of economic conditions. An asset class is any type of investment like stocks, bonds, real estate, and cash. And of course, there are different types like short-term investment funds. The goal is to provide liquidity and preserve capital by reducing exposure to market volatility. Bonds and Treasury inflation-protected securities, assets that are typically less volatile than stocks. Treasury inflation-protected securities, or TIPS, offer inflation protection. These assets may produce lower growth potential than other more aggressive stocks, and equity securities, assets that offer greater potential returns than other asset classes over the long term, yet may be subject to greater market volatility over the short term. The asset classes included in the CalPERS 457 lineup offer a broad category of asset classes, so our members may create a well-diversified portfolio. It is important to try and measure how many years you will have to save while you are working. The less time you have, the more you may need to contribute to meet your savings goal. You don't want to have to work longer to meet your goal. Understand that the savings you have accumulated to supplement your retirement income needs to last throughout your retirement. Smart investing requires a trade-off of how much risk you're willing to assume to receive greater potential earnings. Many people overlook some of the risks associated with investing, such as investment risk. The value of your portfolio may decline due to market volatility. Not investing in asset classes that suit your personal style, that complement your personal risk tolerance. Earning less than the rate of inflation and losing the purchasing power of your money. The risk of outliving your supplemental retirement savings while in retirement and ensuring that you and your family have adequate funds throughout your retirement. The CalPERS 457 plan contains many investment product options, with all funds managed by CalPERS staff and professional external investment managers. An additional option allows participants to select FDIC-insured certificates of deposit, or CDs, as well as allowing access to more than 4,000 mutual funds that all may be self-managed. CalPERS makes it easy to make smart decisions as you select funds from your 457 plan. The plan offers 3 different styles. You may select one of the target retirement date funds. Just identify the year closest to the year you plan on retiring. The funds are designed to become more conservative as you approach that date. You may select another style of asset allocation funds. Just identify your personal style of investing and select the conservative, moderate, or aggressive asset allocation fund. These allocations don't change over time. For those who prefer to manage their own portfolio, CalPERS offers a diversified selection of funds from our core fund lineup. These funds may be combined to create your own portfolio. All investments and services are delivered at low cost through a simple and fair fee schedule. So, what are the important points to remember about our CalPERS 457 supplemental income funds? The way CalPERS invests is the cornerstone to our retirement fund security. CalPERS employs some of the best investment talent available. Our investment team is always looking for new opportunities to secure positive returns at acceptable risk levels. CalPERS offers diversified investments, and that diversification is vital to members' future financial security. And isn't that what we all want, to retire with financial peace of mind? The CalPERS 457 Supplemental Income Plan lets you do just that.